Elon Musk just called Congress's $1 trillion spending spree disgusting, and smart money is already preparing for what's coming next. Today, I'll break down exactly how this debt disaster could set Bitcoin up for the next parabolic run. American politicians are about to do the unthinkable. They've set the stage for an unlimited spending spree by blowing up the debt ceiling. No more limits, no more breaks. If you think $36 trillion in debt is bad, wait until you see what's coming. This is what Bitcoin was made for. Right now, Washington could be detonating the biggest fiscal time bomb in US history. Congress is looking to pass a $1 trillion spending bill so reckless that even Elon Musk, who just tried to cut $1 trillion from federal spending as part of his short-lived stint at the government, couldn't stay silent. His viral post? This massive, outrageous, pork-filled bill is disgusting abomination. Shame on those who voted for it. This bill is more than just pork. By scrapping the debt ceiling, lawmakers have effectively set the stage for the debt to spiral to $55 trillion by 2034. No more artificial constraints, just runaway spending on autopilot. The result? The deficit this year alone could hit $1.9 trillion, or 6.2% of GDP, while annual interest payments on the debt are now outpacing the entire defense budget. This viral chart circulating on X shows interest eating up 25% of all government revenue, and we're not even in a recession. If you're not scared, you're not paying attention. So share this video with your loved ones, ladies and gentlemen, because this is getting real. And let's get real about the math. Even with the safety net budget cuts, the new spending bill on its own will add nearly $3 trillion to US debt over the next decade. And that's just the start. Factor in rising interest costs, and the real number could be $5 trillion by 2035. All this assumes that we dodge a recession, and if we hit a mild slowdown, the deficit could double those forecasts. Scott Bessent, the Treasury Secretary, is out on TV promising the US will never default on its $36 trillion in debt, while spinning the bill as lasting relief for the American people. But if you dig into the numbers, the reality is simple. The US is projected to spend about $952 billion servicing its national debt in 2025, roughly 13.6% of the $7 trillion federal budget this year. Think about that. We now spend more just to service our debt than we do on Medicare, Medicaid, and even the military. The so-called Responsible Budgeting Act is a joke. It rubber stamps new debt with no plan to stop the bleeding. No matter who's in power, the debt only goes up. That's just how math and politics work. You know it's bad when the political class starts eating its own. Trump is now blasting Powell for moving too late, demanding emergency rate cuts. Meanwhile, Democrats and Republicans are both pointing fingers at each other, shifting the blame as the debt piles up. Scott Bessent is on cable news talking up the bill's benefits, but the market isn't buying it. Even Musk, who spent $300 million backing Trump's campaign, is publicly breaking with him over the debt bomb. The cracks, they're widening. The upshot, nobody's got the will or the votes to actually cut spending or raise taxes enough to actually matter. That leaves one way out. Print, borrow, and pray the dollar stays the world's reserve currency. In this kind of environment, the game changes. The world's savviest investors are already moving. Ray Dalio, yes, Mr. Bridgewater, the king of the debt cycle, is now openly telling people to hold a bit of Bitcoin alongside gold to hedge against the debt spiral. This net liquidity chart from Raoul Pal shows every time the Fed and Treasury juice the system with debt and spending, Bitcoin and gold surge. Look at the numbers. Despite the sideways chop in price, Bitcoin ETFs are clocking steady inflows. $87 million yesterday, while ETH ETFs pulled in $57 million. Retail's asleep, but institutions are quietly accumulating, positioning for the next liquidity wave. Dalio's not alone. Wall Street veterans are now admitting there's no way to balance a budget without major cuts to Social Security or a massive new taxes, neither of which are politically feasible. So what do you do? Well, you move your assets into things that can't be printed away. Bitcoin, gold, and maybe a little dry powder for what's coming next. At first glance, it may not seem like much is happening in this market, but don't let the low volume fool you. Smart money is positioning. While the headlines obsess over price, US-listed Bitcoin ETFs are quietly stacking up coins day after day. Farside's tracker shows a long streak of positive inflows, even as volatility and apathy keep retail on the sideline. Ethereum's spot ETFs are doing the same, pulling in fresh capital as summer rotation into majors heats up. This, my friends, is what accumulation looks like in the early innings of a new macro cycle. Why are institutions buying? Because they know everything that I just explained to you. That interest on debt crowds out everything else. Capital will flow into assets that can't be inflated away. That's Bitcoin's role in the next chapter. And most people still don't get it. If you want to know where the biggest winners outside of Bitcoin will be, just look at the Circle IPO. And by the way, before I get onto Circle, full disclosure, I invested early into Circle and they just went public today and it's been a huge deal. Pat myself on the back. Circle is the issuer of USDC, aiming for a $7 billion public debut. And it actually far outperformed that. Demand was so hot that the raise was 25 times oversubscribed, meaning that investors tried to throw them 25 times the amount of capital that they wanted to raise, even after they had already upsized the deal. USDC supply is up 90% year over year, now topping $62 billion in circulation. But here's the biggest growth driver. Nearly all of Circle's revenue comes from parking USDC reserves in short-term US treasuries, making them a direct beneficiary of US government's exploding debt. As rates stay elevated and the debt keeps growing, this digital T-bill business is a gold mine. Wall Street gets yield and stablecoin demand grows with every new fiscal crisis. Circle's bull case? If stablecoins balloon to $1 trillion supply in the next 5 years, which they definitely will, and USDC grows its share to $240 billion, Circle could see $1 billion in net income and $30 billion market cap. Regulatory bills like Genius Act and MiCA in Europe would lock in their moat, letting them milk the next phase of the US debt story. But remember, the biggest upside from this wave of stablecoin adoption will go to Circle shareholders, the insiders and early backers willing to hold through the noise. That's why I bought the shares myself. And now that you see where this is all heading, you've got a real shot to position yourself too. If you believe, like I do, that stablecoins will be one of crypto's biggest growth engines, this could finally be your way to claim a piece of that upside. The kind of opportunity that's been reserved for institutions until now. So what should you actually do in this environment? Well, I'm not a financial advisor, but I can tell you my plan. First of all, I know that there's nothing politicians can do to save the dollar or the deficit. They'll continue to print more and more and continue to do so on and on and on. They have to. So what am I going to do? I'm tracking the flows, especially ETF inflows and stablecoin supply. That's where I think the quiet accumulation is actually happening. Next up, I'm doubling down on hard assets, especially Bitcoin. It's the only major asset with a fixed supply and global demand. But when it comes to yield, I'll be looking for institutional proxies like Circle, especially considering the coming stablecoin arms race. Guys, also, I can't stress this enough. It's so important to always check the balance sheet and business model. If you can't see where the yields are coming from, it might be coming for you. So I always ask myself this question before I part with hard-earned money. Am I getting ownership or am I getting dumped on? And guys, I want to tell you a really valuable story here. As impressive as it might sound that I invested in Circle and it absolutely exploded today, at the time, I had to sell my Bitcoin in order to invest in Circle. The price of Bitcoin at the time that I invested in was about $4,000. So it's up about 25x from when I invested. I can tell you guys that my returns on that investment did not do 25x. It was kind of close, but it wasn't 25x, which would have been if I had just held Bitcoin. So if I had not been all in Bitcoin and I was spending my crappy dollars to buy the Circle shares, then it would have been a great deal. But in 2013, I went all in on Bitcoin. And so these investments that I had to make in things like Kraken and Circle, I had to sacrifice Bitcoin in order to make the investments. And Bitcoin has outperformed almost everything that I've invested into. And a lot of people think that it might be too late, but I'm here telling you today that it's absolutely not. I think over the next 10 or 15 years, Bitcoin still has another 100x left in the tank. And so here's the bottom line. America just detonated the debt bomb. And instead of fixing it, both parties are fighting over who can spend more, print more, and promise more. The result? The next decade will belong to hard assets, not empty promises. Bitcoin is the escape hatch, the life raft. Stablecoins like USDC will see explosive growth as Wall Street feeds its unquenchable thirst for yield. Position now, get educated. And of course, this is the best place to do that. So remember, guys, to subscribe so you can stay one step ahead. Throw a like if you've been getting value from this, and let people know in the comments if you find this channel valuable, because it really helps, guys, in spreading the word. It's a free and easy way to help the channel. And also, if you want updates in real time, follow me on X at Kyle_CHASSE. Until next time, ladies and gentlemen, stay sharp. Remember, keep stacking the Satoshis, and I'll see you in the next one.